All right, get ready because today we're going deep on something that just might shake up how you think about, well, pretty much everything. We're diving into money.
Yeah, the illusion of money. We're going to be talking about what it actually is, how it comes to be, and how this whole system functions, especially for, those who seem to have it all figured out.
I am so ready for this. I have this stack of reports, analyses, even some personal stories, and they all seem to be pointing to this kind of unsettling idea.
That money isn't actually real.
Yeah.
It's more like we all kind of agree to believe in it, the system of like debt and promises.
Okay, that's both intriguing and a little bit terrifying. So let's break this down. One of the sources asks this really interesting question.
What's that?
Is it even possible to owe money to nobody?
Hmm. That really gets right to the core of this whole thing, doesn't it? I mean, think about it. If every debt has to be owed to someone, then where does all the money even come from?
Right. Yeah, that's a great point. We hear about these huge amounts of government debt, like
Yeah.
trillions of dollars. Someone has to be on the other end of that.
Exactly. And it's not just, oh, we owe it to like future generations or something. The real answer is hidden in this complex financial system, especially how banks work.
Okay, so banks are at the center of all this. A lot of
Yeah.
these sources talk about banks being these middlemen. They take deposits from some folks, lend that money out to others, and that creates this chain of debt.
Exactly. But here's where it gets really, really fascinating and where the idea of money being created out of thin air comes in. This system that we have, fractional reserve banking, it lets banks lend out way more money than they actually even have in their reserves.
Hold on. So they're lending money they don't have.
Mhm.
How is that even possible?
It sounds a bit like a magic trick, but with very real consequences, right? Imagine you deposit, let's say, $100 in the bank. The bank has to keep a certain percentage of that as a reserve, maybe 10%.
Okay.
That means they can then lend out the remaining $90 to somebody else.
So that $90, it becomes someone else's spending money, even though it's like technically your money too.
That's exactly it. And then that person who borrowed that $90, they might deposit it into another bank. And that bank can lend out a portion of that deposit, and on it goes. So that initial $100 deposit multiplies, creating new money every time a loan happens.
So money is being created through this cycle of lending and depositing.
Mm.
It's not just about printing physical bills. It's this whole other thing. It's about expanding the money supply through credit.
That's the heart of it. And this entire system is backed up by the government, right? They make it legitimate through legal tender laws. They enforce debt. They've got all these banking regulations. And these rules, they kind of create this illusion that money is this like tangible, limited thing.
Okay, I'm starting to see how money might be more of an idea than a physical thing. But how does all of this lead to wealth inequality? All these sources are saying the ultra-wealthy, they see how this game works differently.
That's the key. The wealthy, they don't just hoard money. They understand how to use the system itself to generate even more wealth. They see debt not as a bad thing, but as a tool
A tool to do what?
to leverage their assets, to increase their returns.
So it's not just about working hard, saving money.
Mhm.
It's about knowing how to play this financial game strategically.
Absolutely. And that's where understanding the difference between good debt and bad debt comes in. The wealthy, they use debt to buy things that will make them more money. Businesses, real estate, stocks, things that grow in value over time.
Okay, so using good debt to buy things that make them even more money. But isn't that like a gamble?
Mhm.
What if those things they buy, those assets, what if they lose value?
Yeah, any investment has some risk for sure, but the thing is, the wealthy, they kind of get how to manage that risk.
Okay.
They research, they diversify what they own, and a lot of times they have financial advisors, people who help them make smart choices.
So it's about being calculated, not just like getting into debt all willy-nilly.
Yeah.
And they're using this system, the same one that like makes money out of thin air. They're using it to their advantage.
Exactly. And this is where we start to see that gap, the one between the wealthy and everybody else. It starts to widen because most people are taught avoid debt at all costs, live within your means, save for the future.
Right, right.
But those strategies, I mean, they might not be enough, especially in a system where, like, asset prices are so inflated by debt.
So the advice that most of us get, work hard, save money,
Mm-hmm.
buy a house, that might actually be holding us back.
It's not that those things are bad in themselves, but they might not be the most effective in a system that's kind of built to benefit those who know how to use debt and assets to their advantage.
So the wealthy are playing a different game, it sounds like. But these sources also talk about the system itself not always being fair.
Hmm.
There's this talk of manipulation and scandals that seem to help the people at the top. Yeah.
Yeah, unfortunately, that's kind of a pattern throughout history. When you have a system that's based on debt and creating money, there's always the possibility of people taking advantage.
Yeah.
One example that really, I think, shocked a lot of people was the LIBOR scandal, where you had this group of banks and they were working together to manipulate interest rates.
To make themselves more money.
Exactly, they wanted to profit.
I remember hearing about that, but honestly, I never really understood what LIBOR was. Can you explain that?
Sure, LIBOR. It stands for the London Interbank Offered Rate. It's basically a benchmark interest rate, and it affects trillions of dollars in loans and financial stuff all over the world.
Wow.
So when banks mess with that rate, it has this ripple effect through the entire global economy.
So it's not just some abstract number.
Mhm.
It actually affects people, real businesses,
Yeah.
even whole countries.
Absolutely. The LIBOR scandal really showed how deep the corruption goes, and this willingness to use the system for personal gain, even if it hurts a ton of other people.
And from what I'm reading in these sources, this kind of manipulation, it's not just about interest rates. They talk about rigging the gold market, too, and potential scandals with these things called ETNs.
Yeah, exchange traded notes, right?
Right.
Yeah, the gold market, there's a lot of secrecy around it. There are these accusations that central banks have been keeping the price of gold down for years, to make those fiat currencies look stronger.
Interesting.
And the ETN market, which is all about these complex financial tools linked to things like oil and gas, it's had its share of problems too, accusations of fraud and price manipulation.
It's a lot to think about, all these layers and potential for corruption.
Yeah.
It makes you feel like the average person is stuck trying to figure out a system that's designed to be confusing and to put them at a disadvantage.
And that's exactly why it's so important to be aware of this stuff,
Yeah.
to look into things yourself and be skeptical of any advice that sounds like a get-rich-quick scheme.
So what can we do? If the system is kind of rigged, how can we even try to build wealth and be financially secure?
That's the big question, isn't it? But it's not about giving up. It's about seeing the system for what it is and then figuring out how to navigate it strategically. It can be a lot, right? It's almost like someone gave us this decoder ring and now we're seeing like the real truth behind the financial world.
Yeah, it's a lot to process.
Yeah.
But okay,
Yeah.
so where do we go from here? What can people do? I mean, if the system is rigged, how can anyone build wealth and feel secure about their finances?
One of the sources really emphasizes this idea of financial literacy. It's not just about making a budget and saving. It's about truly understanding how money is created, how debt works, the whole financial system.
It's like learning the rules so you can play the game even if the odds are kind of stacked against you.
Right. And it's about questioning the advice we've always been given,
Yeah.
Avoid debt at all costs, buy a house as soon as you can invest in the stock market. But those strategies, they don't work for everyone, especially when asset prices are so high because of all this debt creation.
Okay, so what are some other options? What can people do to build wealth if they don't have the same resources and information as the super rich?
One approach is to focus on what they call human capital, investing in your skills, your education, your knowledge that creates a foundation for real long-term financial security.
It's about being valuable, right?
Yeah.
Making yourself indispensable.
Exactly. Another strategy is to look into different types of assets, Real estate and stocks can be good, but they go up and down. There are things like precious metals, commodities, even cryptocurrencies. Those offer different levels of risk and potential reward.
So diversify. Don't put all your eggs in one basket and be open to new ideas.
Exactly. And think long term. Building wealth, it's not about getting rich quick. It takes patience and discipline and a willingness to learn.
One source talks about community and collaboration too. It says we can't do this alone. We need to work together, support each other to create a fairer economy.
I think that's so important. Creating a better financial system, something that's more just and sustainable, it's going to take all of us. It means demanding transparency, holding the powerful accountable, making a system that benefits everyone, not just a select few.
It's actually pretty inspiring to think about creating a system that reflects our values, one that prioritizes fairness, sustainability, and shared prosperity.
It's a huge challenge, but it starts with being aware, individuating ourselves, and wanting to make that change.
So we've talked about the illusion of money, the power of debt, the potential for things to get manipulated, and the importance of financial literacy and working together.
We've only just scratched the surface, but hopefully this deep dive got you thinking and gave you a new way to look at the world of finance.
For sure. And here's one last thing to think about. If money is just this thing we all agree to believe in, what does that say about what's truly valuable in our society? What matters when money isn't as real as we thought it was? That's a question for another time, but until then, keep learning, keep questioning, and keep pushing for a better, more equitable future for everyone.